Good afternoon, everybody. Hi, Tony. How are you?
Hi, Nikki. Yeah, very good. Thank you. And thanks for inviting me today to the business broadcast. Yeah, really excited about it.
Excellent.
And it's really relevant as well with our, a lot of our clients experience difficulties with their professional indemnity, and it's a challenging time for us as well. So it's really relevant.
Yeah, absolutely. So I'll just wait a minute or so for everybody to get comfy and grab their cups of tea, and hopefully, and then we will start going all delving in deep dive into professional indemnity.
Yes.
So for those of you who don't know Tony, there might be a slight clue on his screen. He's from MacBeths Insurance Brokers. So I actually met Tony for the first time, ages and ages ago. We used to live on the same close at one point, didn't we, Tony?
Literally
Very long time ago.
3 or 4 houses away. Yeah, absolutely.
Yeah, 3 houses ago. Yeah, absolutely. It was just around the corner. And then, and I remember going in when I first started my practice, because I based it from home in Tilehurst, and I remember going in to the old MacBeths office in Tilehurst and meeting some of the team. Team's a bit different now.
Yes, there's almost
still some of the same faces, but much bigger.
Absolutely. I think there's about 40 of us now. So it's changed from those days when we was like five of us in a small office above a convenience store. Yes, indeed.
Yeah, next to NatWest Bank it was, wasn't it?
It was, indeed.
Convenient for parking around the back, but it's much nicer. Your current offices are so much nicer to go to.
Thank you.
So hopefully everyone's sitting comfortably now. So the reason why I invited Tony across today was insurance. Talk about insurance. It's really important every day we're talking to clients, and almost every day something comes up about insurance, whether it's talking about how making sure they've got the right coverage, or making sure that they can predict what premiums in their budget, etc. So I thought perfect to bring Tony in today, because especially there's been a lot changing in professional indemnity recently. Well, what's been happening, Tony?
Okay, so yeah, that's absolutely right. And just to set the scene slightly, what's happened is the insurance market's changed from what we call a soft market into a hard market. It used to happen in cycles, and those cycles used to be every sort of 6 or 7 years. But that for the last 20 years, the market has been relatively soft. So that means that there's been plenty of competition. Rates have been reasonably level or actually going down in some cases. Now, the PI market was one of the first classes of insurance that was affected by the hardening of the market. So it's the reverse of the soft market. So we've got fewer insurers quoting, less competition, insurers starting to ask more and more questions about a risk, and sometimes declining to quote at all, or saying, this is the price and there's no negotiation on it. Now, the cause is...
that's scary. People refusing to even quote.
In some cases, I've had a couple of risks that are really heavy from a PI point of view, where even our Lloyd's markets haven't been able to get terms. But it all came about. The first thing that happened was Glenfell, the fire there, and as a result of that, cladding consultants that were doing design and construct, their PI premium started to go up. Then the architects that were doing high-rise buildings, the same sort of scenario, and other sort of things, like they had a few claims for bunker basements in London where buildings had collapsed. So those sort of professions were the ones that got hit first of all. But
because you wouldn't think that, oh goodness, my PI insurance is effective because I'm running a accountancy practice and I'm affected by Grenfell.
Exactly. What's happened is also at that time, around the sort of 2018-19, there was something called a Lloyd's review. So Lloyd's of London asked all their syndicates to look at their different classes of insurance and which ones were profitable and which ones weren't. And the PI insurance was shown to be not a profitable class. So they basically said, you need to get your act together. you either need to increase rates so you become profitable or come out of the market. Now, some of those insurers came out of the market, which meant there was a reduced capacity. So the insurers that remained increased their rates, and that's what's happened, and that's why it's being affected across the board, not just the sort of design guys, but it's in different degrees. So there are some occupations, architects, surveyors, accountancy to a certain extent, insurance brokers particularly. Our PI went up absolutely a massive amount, but generally across the board we're finding that rates are going up. Insurers are trying to restrict cover if they can, and asking a lot more questions when it comes up for renewal. I'll give you an example. I've had a client for many years, and they are a genealogy consultancy, and turnover's been fairly stable for the last 3 or 4 years, and they were paying premiums around the sort of £4,500–5,000 for their PI. Last renewal, the insurers upped their PI premium to 12,500, so from 4,000 to 12,500. I did a exercise on it, and I found one insurer that was slightly more competitive, and I used that as a leverage to get the premium down. But this year it's come up for renewal, and they're looking at 18,000.
Oh.
So just massive hikes in premiums.
Yeah,
But
and
it's not all sectors, but some sectors have been particularly badly hit.
Yeah, absolutely. And I brought it up with you a few months ago because I was coming up to my renewal, and I'd heard through some other people in my sector. It was actually a specialist. It was a pension audit company, and theirs went so high. Their business was potentially unsustainable because of it. So I was like, oh my God, I hope that's not going to happen to us. And thank goodness Tony's done some magic, and yes, it has gone up, but it's absolutely manageable, so not a problem. So that's why it's so important. So actually, how has that's those things that have happened, Grenfell, the Lloyd's review, that's not COVID at all. What's happened to the market because of COVID? Has that impacted?
It has, but it's indirectly impacted. The PI rates are going to go up irrespective of COVID, but I think with COVID, it's made it almost like a perfect storm, so to speak. The underwriters I've been speaking to are worried about future claims where people have been home working. So people that are not used to working from home, given a laptop, working from their kitchen or their lounge, and being distracted, and therefore not focusing on their work, making a mistake, and therefore a future PI claim coming in. So the jury's out as to whether or not that's going to have a massive impact or not, but it is a concern for insurers. And the other aspect is if people are working at home, there are other people in the office listening to what they're saying, so there's a little bit of lack of direction there as well, and mentoring and things like that. So it's yet to pan out, but it is a bit of a concern to the insurers.
Just to remind everybody that's watching live, if you're watching later on YouTube, on catch up on LinkedIn or whatever, but if you're watching this live on LinkedIn Live, Victoria has just shown, Tori, that has shown that the comments are working. So hi to Tori, thank you for making sure that that's working for me, which is brilliant. But we've got lots to go through, but Tony is absolutely open to answer any ad hoc questions, PI or perhaps some more general business insurance as well, if you're lucky. So please do just pop them in the comments, and I'll keep an eye on them and bring them in as relevant. So can you just remind people, Tony, just because they, perhaps they might not be in a service sector business, or so they might not be so familiar. What exactly is professional indemnity insurance? What's it covering?
Okay, so the premise is that it covers errors and omissions. So people might make a mistake, and as a result of that, their client might suffer a financial loss, and they would sue their supplier. So it basically covers against errors and omissions where there's a financial loss. So it's not to do with property damage or injury, it's more financial. What we find is some companies are forced to have PI, like insurance brokers, accountancy firms, lawyers. It's all part of their governing body that they have to have that insurance cover in place in order to trade. So it's not a legal requirement, but it's almost made compulsory because of their governing bodies. Other people tend to have it because of
I'll just add
contractual.
something in about that. Just to be, just my little bugbear I have. Solicitors is a restricted word. So if you've got a solicitor, they're definitely going to have PI insurance. Anybody can call themselves an accountant. So you may find your accountant doesn't actually have PI insurance if they are not actually if they are a chartered accountant, yes, they will. If they're a chartered accountant, certified chartered accountant, or like us, I'm chartered institute management accountants. We have to have PI. But if it's somebody who's just done a bit of bookkeeping, they've decided to call themselves an accountant, they may have PI, but they don't have to have PI. So sorry, just a little bit of annoying one I've got in my sector.
Interesting. What about bookkeepers, Nikki? Do they need to have it?
Well, yeah. So bookkeepers, there are some professional bodies for bookkeepers now. So AAT and I've forgotten what the name of the other one is, but there's a couple different main ones that a lot of qualified bookkeepers go under, and that's really good if they are with them, because they have to have a practicing license and PI, but also they're restricted on that they're only allowed to work on stuff that they're qualified to do. So you won't get them doing, a tax return or something because they're not tax advisors.
Right.
So yeah. But anyway, so I digress.
What I thought I was going to do, Nikki, as well, if you don't mind, I could tell the listeners about what we'd advise on how to try and manage your PI premiums in these times when rates are going up.
Absolutely.
Would that be useful? Yeah. Okay. So I'm personally telling our clients that we need to be looking at their renewals probably at least 8 weeks in advance of the renewal date. So that should give us time to get all the information that the insurers need and to send it out to the markets that we use. And we have a fairly good understanding of the market, so we know to send an accountancy firm to one particular insurer or a tech company to another particular insurer. So we've got that understanding. What I would say to people is, do not
You must have read Tori's mind, Tony, because that's the question. When's the optimal time?
Yes, absolutely.
Beforehand.
As long as possible is the answer to that question. Absolutely, as long as possible. And information is the key. Provide the insurer with as much information as possible. And that could be contracts that you might be signing. It could be the CVs for the directors. Any information where the policyholder thinks that they might have a particular exposure. Is probably good to tell the underwriter about the risk, warts and all, so that they can manage the risk and understand it and come up with the correct rate. Because what you don't want is a situation where you've got a cheap premium, but it doesn't do what it's not meant to do at the end of the day because it's not the right cover in place. So that is very important. The other thing I'd say as well is don't go out to too many brokers. I think if there's an existing broker at renewal, then that's fine. And then if you are looking to review, then maybe only go out to another 2 brokers. But I had a case the other day with a new business, and this particular lady had gone to 6 different insurance brokers. And what was happening, we was all sending the information to the same markets, and they were all declining. And the underwriter turned around to me and said, I don't want to quote on this because I've seen it from 6 other sources already, and we've declined it. Now, I'm not saying that we would have been able to help, but if she'd just approached us in the first instance, we have a relationship with various underwriters and we can talk things through, and we might get things done that other brokers might not. Now, you can't guarantee that, but that's why I recommend not going out to more than a couple of brokers, because it tends to muddy the waters, and it causes problems.
And the other thing to remember is what type of broker, isn't it? Because some brokers are tied in, but like you guys, you look at the whole market. So
yeah, so
it is, you've got to be careful. Who are you actually asking? I mean, because what's the point? I only ask MacBeths. I don't see the point in asking it, because you look at the whole market for me. So
we do, and obviously all insurance brokers need to be FCA registered, so there is some protection there. But there are brokers, and they're chartered insurance brokers, and MacBeth are chartered insurance brokers. So, and I think it's a good thing for policyholders to maybe even vet the broker before they start their review. So ask them what their experience is in the sector, what markets they're going to go to, what experiences they've had, and can they give any idea on steer on what sort of premium they're going to be looking at.
I've got a really good question that's come in, which perfect for you to answer, Tony. Why would you recommend that someone uses a broker rather than an online firm for PI?
Absolutely, good question. Okay.
And it's a mystery thing, so I wonder if it's somebody from Towergate or something that's writing it.
No, it's a great question, and it's horses for courses, really. If it's a very small risk and it's very clear cut what the business is doing, then there's absolutely nothing wrong with using the direct insurers, and you'll get a quick response, and the premium will be relatively competitive. It should be very competitive, actually. Where a broker can add value is where there is something unusual about the insurance. So it might be there's a contract where the client wants to work under US law, for instance, or it could be the type of business. So like the direct insurers probably will not look at things like financial advisors and lawyers and things like that, because it's just not within their capability. So if it's a small risk and it's relatively straightforward, absolutely nothing wrong with using the direct market. And sometimes I actually advise clients to go down that route, because a broker is probably going to be more expensive than using a direct insurer, and that's just the way of the world. But it's horses for courses, basically.
I mean, I remember when I very first started, I went through whoever I think the FSB recommended at the time, but that's day one with zero revenue. You just do that. And we've solved the mystery. It's actually Chris Davies that put up that question. Thank you, Chris. Hopefully that answered it for you. Super. Do you advise? So, like, I know that we always look at all of our insurance all at the same time. Is that the best thing to do, or should you be just is it fine just to look at your PI and then separately for everything else? What's the best tactic there?
It really depends. Having a common renewal date is a good thing, in that from an admin point of view, all your insurances are due on the same day, and August is my renewal month, so I need to focus on my insurances. I suppose the bad thing about that potentially is cash flow, in that you've got maybe one lump sum coming out at one point, rather than spreading the insurance policies over different times of the year to spread out the cost of it. And some insurance providers can cover multiple risks under one policy as well. So again, if it's a fairly standard risk, you might be able to get a policy that covers your professional indemnity, your public liability, employer's liability, some asset cover as well, all under one policy. So that might be something that's worth looking at as well. So you cover all the risks in one.
And then I've seen advertised that so somebody has got their cover is going to be really huge. I have seen people advertising to cover the payment of it, some sort of insurance loan type thing. What is generally your recommendation? Should you, if you need to have some sort of financing, what generally is the best thing to do there?
Okay, there's a few. Some insurers will offer interest-free finance on PI, which is fantastic, over 12
Perfect.
months.
Why
Really
wouldn't you
good.
take it?
Why wouldn't you take it? Others will offer a relatively low rate. Some don't offer any finance at all, in which case we have an
Meanies.
I know. We have an in-house finance company that can cater for that as well. It's normally over 10 months with a deposit. But if it's an insurance company that are particularly competitive but don't offer finance, then we have a solution for that as well, fortunately. And that's helping people in these times with the COVID and rating increases and stuff like that.
So Tony, what happens? So if the worst happens, I've got my PI insurance, and something's gone wrong. What's the sort of process? When do you say that it's best time to actually have a chat? Who do you talk to?
Okay.
If you
Again,
think
this is really important. At the first indication that there's any dissatisfaction with the client, you need to report it to your broker, or if you're direct with the insurer, to your insurer. That is very, very important, because even though it might not be anything, nothing might not come of it, if the insurers aren't aware of a situation and it later blows up into something bigger, they could potentially repudiate that claim, because they could say, well, if we was involved in that process early days, we might have been able to manage it better and limit the costs. I had a client going back a good few years now, and he changed tack, and he was putting in a ventilation system in a university in London, and he put it in and it just wasn't doing what it was meant to be doing. So it would have been a PI claim to sort it out, because it would have been a financial loss. Rather than report it to insurers, he decided just to chuck his own money at it, and he started trying to fix it himself, and it just didn't happen. And eventually the main contractor got cheesed off with him and said, right, pulling you off the contract, getting somebody else in. And at that point he said, okay, well, I need to make a PI claim. And the PI insurer said, well, you knew about this months and months ago, why didn't you tell us then? And they repudiated the claim. So that's why it's so important to let the insurers know immediately if you've got a feeling that anything's going to go wrong.
Yeah, take the low risk approach. As soon as you know that there's anything, any little niggle, any client that sounds a bit stroppy, give your broker a call just in case. Hopefully nothing will be a problem, but just let them know as soon as possible.
Yeah, agree with you absolutely there. And a broker won't mind giving those notifications to the insurance company. And if they are just notifications, then that shouldn't affect the premium at the end of the day. And in fact, some insurers actually like to have the notifications, because it shows that the client's on the ball and they're aware of what they should be doing. So
it shows that you've got an internal process.
Yes, I think it's a positive rather than a negative, because everybody from time to time will have a complaint. It goes with business.
So Tony, say if somebody, it's a bit too late for this year's premium because they've already just renewed or whatever. So, but they, 11 months, 12 months to their next renewal. What are the top things that they should bear in mind to try and help ensure that their renewal is as reasonable as possible?
I think going back to the point I was raising, getting early, talk to the broker or the insurer 6-8 weeks, even more advanced than that if possible, so at least you can get the ball rolling, so that there's no real nasty last minute sort of surprises when the premium comes up. And unfortunately, in these times with the market hardening, maybe expect an increase. A lot of people say, well, my turnover hasn't gone up. Why is my insurance premium gone up? But unfortunately, it's just the way the market is at the moment. And rather than not expect an increase, expect an increase at the moment. And then, hopefully over a period of time, what will happen is because the rates are hard, more insurers will be attracted into the market. There'll be more competition, and the premiums will start to come down again. But it's going to be a process that might take a few years to happen, I think.
Yeah, absolutely. And sorry, I'm not sure because I just let you sort this out. But with PI insurance, is there anything add-ons that you need to make sure? Is there different legal coverage in the different insurances? Is there anything there that we should be looking at and bearing in mind?
What PI does, it will obviously give you the protection if somebody sues you and you have made a mistake. But very importantly, it will also provide the legal defence costs to fend off a claim. So, say for instance, there's a spurious claim against you. You might be totally not at fault, but it could cost a lot of money to defend that position. In which case, there is legal expenses paid by the insurer to defend the case. And sometimes, the legal expenses are in addition to the indemnity limit. So you might have £1 million indemnity limit plus legal costs on top of that, or you could have the legal costs included within the indemnity limit. It depends on the wording of the actual policy, but it is important to have that. That's one of the main things that we see a lot of times. Our clients not at fault, but they have a claim, and it could be a spurious claim, but they just need somebody to bat it off for them and defend it for them.
Yeah, because that would just be such a stressful thing to have to deal with. So yeah, absolutely. You just want to make sure you've got the right people in your corner. And is there like any, like car insurance, you have you don't get the first bit covered? Is there something like that with PI, or is every penny covered?
No, there is going to be an excess, and that excess is going to vary on business type and what the insurers consider the risk exposure to be. So, I'm just thinking of our own PI. Our own PI last year, we had 2019, we had a £2,500 excess. When it came up for renewal 2020, that excess had gone up to £10,000.
Oh, that's a huge
difference. It's a huge increase in the excess, as well as a massive hike in the premium. I think our premium went up by about 200%, which is a crazy amount. But unfortunately, insurance brokers have been one of the hardest hit sectors for PI insurance. But yeah, there's normally an excess, and it's normally around £1,000, maybe 500. And you could potentially ask the insurer or the broker whether or not increasing the excess would make any difference to the premium that you're being charged. My gut feeling is it's not going to make a lot of difference, but potentially it's worth asking the question. And the other thing I was going to say is indemnity limits as well. It's worth having maybe a look at what the indemnity limits are, because sometimes if you're taking BI insurance because it's a contractual requirement, you might have a particular level that's required by a customer. Now, it might be that you could push back to that customer and say, well, I don't need a 5 million PI limit. I can live with £1 million PI limit. Will you change that particular clause in your contract? And that's something that is a way of maybe managing the premium.
Yeah, we've seen that a few times, because we've got a few famous names, so I won't say them here, clients. So you've got to go through their corporate procurement process, and they expect pretty high limits. So yeah, usually we can just change the limit, or like you say, sometimes we have been able to just push back and say, look, you're only engaging us for perhaps 50 grand, so we don't need to have such a high limit. But yeah, for rather than 10 million limit or whatever. But yeah, so it's just making sure you are aware of those things and fixing it if you need to.
Yeah.
Okay. Super. So Tony, just so to be clear, sorry, Tori did ask another question, but I think we did answer it earlier. So if I've got a client whose premiums have massively increased, what is the best way to change to a payment plan rather than paying up front? Will they incur additional charges? So we covered that earlier. We just, talk to your broker, really, isn't it? And
Yeah, talk to your broker. The insurer might be able to offer something credit facility, or it might be that the insurers can offer interest free. But yeah, speak to the.
Presumably, you can't do that, change that mid policy. You have to do that always at the renewal.
You would generally have to do it at renewal, although the broker might be able to finance a premium over 6 months or something like that, potentially.
Okay.
It depends on the case.
Super. Thank you. Well, hopefully that's given some really good insight for professional indemnity and help some people there with their renewals. So Tony, just remind us how we can get hold of you. You're at MacBeths.
Yes, that's right. So yeah, MacBeths. So it's tony.gibbs@macbeths.co.uk, or you can contact me through LinkedIn. So yeah, readily available to answer all questions, PI or otherwise related.
And what's really handy is if you do, obviously loads of things done on the phone and remote meetings, but if you do actually want to go into MacBeth offices, they're only just around the corner from Laithwaite, so you can go and get your wine stocked up at the same time.
Absolutely.
2 for 1. Thank you so much, Tony. Thanks, a lovely
Nikki.
Weekend, everyone. Oh, we got a little, just a second. What's James? Yeah, well done, James. We got his approval. Brilliant.
Thanks, James. I'll wave for James.
Okay. Right. Thank you so much, Tony. Have a lovely weekend, and have a lovely weekend, everyone. And cheerio.
Cheerio. Bye, Nikki. Thanks a lot again.